Guys, what's up? Today we got a special little something for you. And this actually might be a series that we do somewhat regularly. I have not Charky from the Oakmont here. And the Oakmont's actually a private Discord server, which is opening up for a short time here. If you're wanting to look and get any kind of investment advice, reading charts, stocks, crypto, the whole kind of shebang. And as you guys know, most of the things that I do are all pretty much NFT centric. But of course, we know that there's been previous alt seasons and just in general, kind of wondering what Bitcoin, Ethereum, and all that kind of stuff is doing. So, Charky, do you want to give us kind of a quick little rundown about who you are, what you do with the Oakmont, and then we'll get into things?
Hey Vaughn, yeah, so my name is Charlie, aka Charky Bot, and I'm one of the founders of the Oakmont Discord group. And essentially, what we provide is guidance to individuals that are seeking to become financially free. We set up courses, one on one trainings, and provide advice on markets, specifically the stock market, crypto, and NFTs. Basically, anybody who wants to kind of get rid of the 9 to 5 job or maybe improve their financial status will come to us and we'll develop a plan with them on what key areas they need to work on and how we can support them. Myself and our founders, we feel proud to be able to say that we are financially free. We don't work a 9 to 5. This is what we do for our 9 to 5s.
Well, it's kind of interesting because, I mean, from my perspective, I really never looked into the investing world. Like, I knew that stocks were out there and that kind of stuff. But then when I found crypto and subsequently NBA Top Shot and NFTs, it was like, oh, wow, there's a whole kind of wide world here to invest in. But Sharky, you're showing a chart here. And so let me give like a quick little rundown of some certain things that I think that I know here. So when you see kind of like the bottoms of the charts here, it's always something that you want to look for the lower lows and the higher highs, right? And so that's one of the main things that I'm looking at. And so on kind of like the far right there, we see that huge candlestick down. That's green, I think, is the terminology. And then the next one is kind of lower. So does that mean that we're just going on a free fall down here?
Yeah, we've been definitely on what we call a correction, and that's actually going to be the point of our training today is on the Elliott wave theory. The Elliott wave theory is a strategy that's used by some investors to basically try to pinpoint market tops and bottoms. As you know, and what many people assume about the markets, the easiest way to make money is to buy low and to sell high. Well, how do you know whether you're there or not? So I'm glad that you pointed that out. So yeah, we're on tradingview.com right now. This is my personal chart that I use. There's a few indicators that I have on here, but yeah, you were talking about the candlesticks. So each one of these little candlesticks in red and green indicates one day of trading. If you look at the top left here, there's different timings that you can choose. The shortest one that I use is a 5 minute, which is every one of these candlesticks is 5 minutes. And then the longest one that I use is a 1 week. So that's how we start setting up. So to kind of just jump into things, one of the very first things that anybody should be doing with anything, whether it's crypto, NFTs, or stocks, is taking a look at the tops and the bottoms. So we call that support and resistance. Always start with there and always start with the 1 day chart. So right now I'm looking at a chart of Microsoft. So one of the very first things that I do is I grab a line here and I just kind of mark off where the most recent highs or lows were of that specific a ticker, and then I kind of look to see if there's anything specific that sticks out about that. One of the things that you want to look out for is when does a level, let's say one of these green lines, ever get touched again? If it hits it again, then we can really say that that's a significant area of either support or resistance. So for Microsoft, since the end of 2019, there's really been two or three spots that we look at: the high of February 2020, the low of March of 2020, and then the most recent high in November of 2021. So any plan that you have, any strategy starts there. Now, I am what we call an Elliottician. I love to use Elliott Wave. And the reason why I'm such a big fan of it is because it works off of human nature and psychology. So remember that even though there are algorithms, there are bots out there that trade, you're probably trading with another person on another computer somewhere else in the country or in the world. So the more you understand how people react to price movements, then you can kind of start to predict where prices are going to start to move up or down. So obviously, right now, like you said, we've been on essentially a free fall with Microsoft. So the question is, well, have we reached the bottom yet? Is this it, or do we have more to fall? So to introduce Elliott Wave, the first thing I want people to realize is that as people, right, as human beings, we have two basic emotions, right? We have excitement and then we have everything else. So when you're looking at a stock, you'll either see it go upward or you'll see it come down in some way or fashion. Okay. So the first one that we have is the first wave is an impulsive wave. Okay. So an impulsive wave is when we do something abruptly, right? We make brash decisions, we YOLO on something, and we go all the way up, right?
Yeah, yeah.
And then we realize, you know what, that probably wasn't a good decision, and we turn into a correction. Okay. So stocks and analysis of candlesticks is built off of these two ideas: impulsive waves and correctional waves. Now they're always going to follow each other. An impulsive wave is always going to come after a correctional, and a correctional is always going to come after an impulsive wave. All right. So right now, Vaughn, I'll just ask you, since November, so let's take a look at this area here. Can you tell me, are we in an impulsive or are we in a corrective wave in this orange circle here?
I would assume corrective.
Corrective, right? Why?
Because we're just we're going back down after a kind
Going
of
back
large run up.
Right on, right on. So, um, since we have this theory kind of solid, right? Impulsive corrective, we have to understand that there is waves within those movements. Okay, so impulsive are generally built off of 5 waves, and corrective are built off of 3. So in trading view, if you go to this indicator here, you'll find here Elliott impulsive wave 1, 2, 3, 4, 5. Okay, so this is what a basic impulsive wave looks like. We have that first wave, then we have a correction down to 2, and then we have a huge wave 3, and then a corrective 4, and then we finish off with a 5. Okay? Generally, that's what you're going to find. Now, if you zoom out, it's going to look like a straight line. It's going to look like this, right? Like this orange line. But if you zoom in, you're going to see that there's actually waves within there. Okay? So that's impulsive. So we can move this over here, and that's an impulsive wave there, right? Now, a corrective, and there's a reason why we switch up the letters, is ABC. So we move down, we move up, or what a lot of people call a dead cat bounce, and then we have a final wave down. Okay, so 5 waves up, 3 waves down. All right, so we're gonna look at the highs and the lows of this move and start to determine whether we're correcting or whether we're going to continue to be in an impulsive move. So looking at this move in the last 5 months of Microsoft, you can say, yeah, we're in a correction, right? We've been moving downward. This shows, it looks nothing like this candle over here. Sorry, this wave. It looks more like this. So when are we going to start to move up? Okay. So for this week, I'm not going to go into this, but I'll just kind of hint out at it. To determine the levels at which it can stop, we use something called Fibonacci. Okay. Fibonacci was an Italian mathematician from the 1100s that took a trip to China one day and discovered these what we call natural numbers, basically 0 and 1. And as you add up those numbers, you come up with the Fibonacci numbers: 1, 2, 3, 5, 8, 13, 21, and so forth. And when you divide those numbers together, you get these percentages. So if we look at our charts, and forgive me, I don't remember where this is at. Oh, here it is. We have a fib retracement and fib extension. So we're going to use a fib retracement. And what I'm going to do is I'm going to measure it from the bottom of this low and then stretch it out all the way to the top of this move. And I'm going to extend it so we can see it. Now, I know there's a lot of lines going on here, but you'll notice that for Microsoft, this 236 level was the first area of support where it bounced off of. But it still looks like it wants to go lower, down to 238, which is 262. So this is what I would look at for Microsoft as an area of possible support. Okay, any questions so far? I know it sounds like a lot, right?
So on the top there, you have kind of like that little shadowy gray area where it shows kind of like, excessive volume, I think, where that's kind of showing the volume. So does that mean when that chart is higher that that's where most sales support, like, is that considered like a support, or is that just like generally volume?
Yes, yes, definitely a form of support, or specifically in this case, resistance. So this is a called a volume profile. So instead of a normal volume, which dictates volume based on time, right? Usually you'll see it down here, right? You'll see it down here. You'll see this spike like this, a volume. This is on the side. It determines the price action, the volume based on the price itself, right? How many people buy at 300? And as you know, the big round numbers tend to be stronger supports and resistance. So obviously 300 is a huge wall. So you see right now that when we dropped to this low of 273, a week ago, we went up to test that wall and we got rejected. That's the resistance right there. So there's a solid line there at 300 now. So we got rejected and now we're on the way down. So we're going to go back down to a place that's familiar to us where we feel comfortable. Well, we did mark off this green line as a support back in October at 280. Well, guess what? 3 days ago, we hit that 280 right here and we immediately bounced back upward. So now we've built a zone between 300 and 280 for Microsoft. And again, that volume profile is going to change based on the time frame that you're using, but that's a very good form. So basically, the way that I read this, the more volume that there is, right, the higher this gray cloud is to the left, the more resistance it's going to have. The thinner, like right here, right around this level of 315, 320 here, that's a very weak spot of resistance. So if it does get up here, as slow as it might get up there, when it gets here, it might pop straight up.
Well, okay, so with this, we're talking about like impulse, right?
Yeah.
And this is just a guess, but it looks like the top was bought in impulse because there's a huge volume kind of near the top. Is that the way that you read that? That there was a bunch of people that bought the top essentially?
Yes, and so this is where the Elliott wave impulsive move, a wave comes in. So there's actually a very simple way to explain this, right? We have a wave one, a two, a three, a four, and five. Okay, so to explain why this happens, and we're not talking about algorithms or anything like that. We're just talking about human nature. So a stock hits a bottom. Nobody knows when this is going to happen. I mean, we get pretty close sometimes, but we never know. The price of that stock starts going upward, right? Well, the people that bought it are going to start cashing in, right? So they sell and it goes back down. Then this is where the institutional buyers come in. And we're not talking about me and you, right? Or anybody else.
Yeah, not us, not us.
We're talking about guys that have, 12 digits in their bank accounts, right? Not four or three. So these guys are the ones that get in at this point because they see already, okay, we're done going downward. It's time to go back up, right? For whatever reason, technical analysis wise, it starts to shoot up. Boom. Okay. Now, as far as Elliott wave, wave three will always be your biggest wave. Always. Okay. It may not be it will never be the smallest. Okay. So after the institutions get in, right, it starts getting really popular, right? People start hearing about it on Twitter. Oh my God, Tesla, this and that, or AMD, blah, 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 whatever stock or crypto you're talking about. Then it starts to take a dip down. And guess who comes in at that spot?
The institutions. Oh, the retail. Okay, never mind. I was about to say, did they right? Okay, right. Interesting.
So what happens is, and I guarantee you, anybody who's ever invested, this has happened to them. They enter a trade, it starts going up. They think, oh, I'm the smartest thing, since sliced bread, right? Like I'm the greatest. And then all of a sudden it starts to dip down. And they're like, oh, you know what? I don't like this. But then it goes back upward. Okay, I'm okay. And then it goes down again, and then they end up losing all of their money. Why? Because after after an impulsive wave will always come a corrective wave. A, B, and then C. And that's why the retail traders always lose.
Spicy. Yo, I love that breakdown. This is This is super cool to see. And I mean, I know kind of like about the institution and then the retail and kind of like the battle between it, but being kind of shown that in that light is really interesting. And then seeing, you know, kind of you get to see it in person in a way, like people buying the top. We always see that in NFT Twitter where people recently talk about, oh, you know, like I bought this project and, you know, it was the top of it. And it's always, you know, right after kind of a hype wave when everybody's starting to talk about it on Twitter, et cetera, et cetera. And it, you know, kind of same thing shown here in the chart for Microsoft.
Yeah, I always like to emphasize to people that, to be uber rich or uber successful, you got to be contrarian and right, right? You got to be thinking the opposite way. So right now, just like you, and I can put you as a retail trader because you don't have the experience, right? Um, you're saying, oh, we're going to keep falling. We're free falling. Well, guess what? Institutions right now are starting to buy back into Microsoft and all of those other tech companies. Look at Nancy Pelosi and some of our administration, right? They were buying options on tech companies back in December, not stock, options. And they're clearing, they're making tons of money hand over fist because of that. So right now, if the question is, are we done consolidating on Microsoft? My answer is maybe. I think most likely because for corrections, usually we go 3 waves down. It is possible to go 5 waves down. So if we look at that, it looks something like this: one, two, a big three, up four, and then we're finishing off five. Okay, you see how perfect that looks, how nice it looks. So this might be the case for Microsoft. It could be there, or it could be here, but it's probably over here, or maybe even has a little bit further down. But regardless, we're somewhere near the bottom, at least short term. Now, after a corrective wave, even though it's a 5 wave pattern, you are going to get an impulsive wave to the upside. So we should see something like this in the near future. Oh, actually, well, we'll just start it there. Let's assume that the bottom was here, but we should see something like a one, a two, and then a three, a four, and then probably a five, something like that on Microsoft. So again, I'm actually looking at the market to make some kind of strong move in the near future. Maybe in the near future, we can talk about this thing called leaps, which are basically big, large bets on the future of the market, a year, 2 years out. But I'm looking at making some pretty strong, declarations as far as next year.
Yo, I love it. Guys, listen, if you enjoyed that session from Sharky and you're interested in joining up on the Oakmont, you can follow them on Twitter at the Oakmont and Sharky. I'm excited for the next week. We go through some more stuff. Thanks for popping by, and we'll chat super soon, boss.
Thank you, Bob. Anytime.